session to ask any questions. Now, the section that we're going to be doing today, I'm recording the session. It will be uploaded on Learn, and the repeat session will take place on Thursday at 8:40. So it's the repeat of what we are doing today. Now, just a few announcements before we actually begin with our session. The VAT section is not very long, so it's not going to be a very long lecture. I just want to bring your attention. I noticed that some of you were trying to log on to my sessions in the last week. That means week 3 and week 4. Some students where I could see emails coming up to me saying that I'm sharing my screen now, that students have logged on to my session. Now you will be aware that I've notified you on week 1 when we had our lectures that we did week 1 and week 2 in our week 1. So both first and second week lectures were covered in week 1. So week 2, we had no lectures. I did inform you that there will be no lectures in week 2. Week 3, you had business plans and cash flows, which Ms. Ramnanan, and week 4 with Ms. Ramnanan, budgets. And now you have taxation with me, which is VAT in week 5. Please follow this, because where you see the online lecture, that's the session you will log on to. So when I am on, I have put on my Zoom link. When you have Ms. Ramnanan, you have to follow her link. And Mr. Kumalo, who's kind of come through after your test week in October 4th, he will send through his link. So when you are attending Ms. Ramnan's lectures, you cannot use my link. Some students were clicking on my link, it won't take you to the lecture. Please follow the online lecture schedule, and we have been going according to this. All right. As I mentioned, I think some students who weren't there in week 1 didn't understand that I said we covered partnership and companies in week 1. So week 2, we didn't have any lectures. However, you had tutorials. Tutorials have been going on from week 2, 3, 4, and this week will be week 5. Now, I want to bring your attention to this as well. Next week, there are no lectures because it's your midterm break. Now, this is good for you because you have no lectures and no tutorials. It gives you enough time to study for your test. Your test takes place in week 1. Now, the test date is on your guide, and you know it opens on the Friday at 3 a.m. and closes on the same Friday of that week at 11 a.m. It's only open for an 8-hour period within which you need to answer all your questions. Now, the scope of the test, please do not email me, as the scope is on your module guide, and I'm repeating it. The scope covers everything that you've done up to and including VAT. So up to and including VAT, that means whatever we're doing this week. Okay, so that is what you're being tested on in your first test. Your first test is a 1-hour test. It comprises of multiple choice questions, but you need to have your calculators with you because they are calculation type questions. You have to be able to answer them, right? So although they're multiple choice, they do require some working that you need to have do while you are attempting the test, right? They will be made up of 25 questions and all MCQs. You will have to do them online. Please ensure that you have been given advance notice. You have ample time to prepare. Please make sure that you are ready for that test, right? Remember, next week, no lectures next week, no tutorials next week, right? Then in test week as well, there are no lectures and no tutorials. However, in test week, you will be having a revision workshop with our ADOs. Mr. Kumalo is handling that. He will post a notice on Learn. You will receive a link on Learn for PMB and for Westville when your revision workshop will be taking place. I suggest that you all attend that because it's very important. It will deal with all topics covered in test 1. So please attend that in test week 1. You will not have any lectures then. So your next set of lectures will only be on October 4th when Mr. Kumalo, he will be doing those lectures, and I will only be back again in week 10 to do working capital. So please follow this And I also mentioned something here. You are aware that these are your lecture times. On a Monday at 10:30 till 12, if we finish before that, it's because the topic has been covered. And the repeat will be on Wednesday, at 8:40. So Wednesday at 8:40 is the repeat lecture. You will not be having, not Wednesday, I made a mistake. It's on Mondays at 10:30. The repeat lecture is on Thursdays at 8:40. The Wednesday is it's a period that is not available to us, but it will only be used if a lecturer needs to see. If they haven't finished the topic that they were doing on Monday, then they will complete it on the Wednesday. But if your topic is finished and your lecturer hasn't informed you that you're having a lecture on the Wednesday, then there's no lecture on the Wednesday. Normally, we only have on a Monday, and the repeat is on the Thursday. The Thursday is for PMB and the Monday is for Westville, but it's open to both campuses, whichever you're available to attend, you attend. Right? So remember the Wednesday and the Friday, I noticed students logging on. These are not confirmed as yet. These are to be confirmed by your lecturer on the week. So it's you need to have these times available because they are blocked off in your timetable as allocated for 103. But we only use them should there be a need for those times. Okay, so as for now, we only have on a Monday and a Thursday. So I will have this repeat lecture on a Thursday at 8:40. And I will send a link out again for Thursday's lecture so that you are aware. So I've mentioned everything now. Remember, tutorials go on this week. Next week, you have no lectures and no tutorials. In test week, you have a revision workshop. Mr. Becky Kumalo will be handling that. So he's not going to do the workshop. Our ADOs, you have their details on on your module guide. So they will send the link for the Westville session and a PMB session. They will deal with all work covered for that up until VAT. That's going to be covered in test 1. Okay. So remember, what is your plans for the next, what is our plans for the next 2 weeks, okay? And then your next set of lectures start after that. Right, now I'm going to be sharing my screen with you. As I mentioned, not a very long lecture. The slides are not much, but I'm going to share some examples from the textbook. Okay, so we're going to be moving on to this now. So you can see my screen, I'm sharing my screen, and we are going through the learning outcomes. At the end of this chapter, you should have some background knowledge on VAT. You need to be able to calculate VAT. You need to calculate markup on cost and selling price, and how to work out prices that have inclusive, that are inclusive of VAT and exclusive of VAT. Now, this is not a very difficult section, and it's not a very long section, okay? So we're going to just do an introduction. We're going to talk about who should be registered as a VAT vendor, the rates for VAT and exemptions, how the VAT system works, how to have markups, how to work out markup on cost price and selling price, okay? So in terms of your introduction and who should be registered as a VAT vendor. So VAT, as you know, is value added tax. VAT is a system of taxation that was implemented in September 1991. It is levied whenever a product is sold or a service is rendered, with a few exceptions, which is exempt supplies. So the government raises revenue by requiring that certain traders, so you know how the government gets money from taxes, right? We pay PAYE, pay as you earn, and most amount of money also comes from VAT. So that's the type of tax that we pay on goods and services that we are using or consuming, right? So the South African Revenue Services, which is SARS, SARS, is the government organization which administers the VAT Act and ensures that this VAT is actually collected. So they are in charge of ensuring that VAT is collected. We all dread the SARS man because he's always watching to see who hasn't paid their VAT, who hasn't submitted their returns, who is not paying their taxes and so on, right? So who should be registered as a VAT vendor? It is compulsory for a person to register if he runs a business where his total value of his taxable income exceeds or is likely to exceed 1 million for a 12-month period. So that is the basis. So it's 1 million for a 12-month period if you're taxable. If you are supplying taxable, your taxable supplies exceed. So this is the income that you must be having for you to actually register as a VAT vendor. So you must be trading so that you are your taxable supplies exceed 1 million rands for a 12-month period. Or a person can apply to be a voluntary registration if you have a minimum threshold of 50,000 that has been exceeded in the past 12 months. So if you had supplying goods to the value of 50,000 in the last 12 months, you can apply for voluntary as a volunteer to register for VAT, right? So you can register for VAT as well. Persons who are liable to register and those who have registered voluntarily are referred to as vendors, okay? Vendors have to perform certain duties and take on certain responsibilities. For example, if you're a VAT vendor, comes with certain responsibilities. That means you must ensure that you issue tax invoices wherever it's required. You must include VAT in your pricing that's been quoted, ensuring that your VAT is collected on all taxable transactions and that you submit your returns on time and you make your payments on time. So you can't just register as a VAT vendor, take the money and store it in your bank account and don't send in your returns and so on, because you can get into big trouble. So it comes with the responsibility. Make sure you have invoices on hand, make sure you submit your returns on time, and make sure you do your VAT payments as per required according to legislation. Okay? Rates and exemptions. Now, VAT was normally prior to 2018, 1st of April 2018, VAT was charged or levied at a standard rate of 14%, and it has gone up to 15% since 1st of April 2018. However, I just want to make sure you're aware that your tutorial solutions that have been uploaded are still using the 14%. I want you just, when you are doing your calculations for tests and exams, to use 15%. So in the TUT, you will find the TUT solutions have used 14%, but remember the standard rate is 15%. Do not use it. It hasn't been updated, but we're hoping that the next set of solutions comes through from the publishers, it will have 15%. But just ensure that when you do your calculations, you use 15% as such. Okay, so VAT was levied at 14%, and there are certain goods and services that either exempt. So normally all goods are charged or taxed at a standard rated supply of goods and services are subject to tax or VAT at a rate of 15%. As a general rule, the supply of all goods and services are taxable at a standard rate unless they fall under one of two categories: zero rated supplies or exempt supplies. Now, zero rated supplies, there are some goods where VAT is levied at 0%. Now, what's the difference between zero rated and exempt? Zero rated, that means you don't charge VAT when you supply these items. There's no output VAT, but there is input VAT. That means a fuel station can have input VAT, but they cannot charge VAT, right? That's zero rated supplies. They include fuel levy goods, basic foodstuffs such as maize, brown bread, and certain exported goods and services. So they fall under zero rated, okay? So an input tax deduction can be claimed. So you can claim input tax deduction, but you cannot have any output tax deduction. That means for supplying it, you cannot charge any VAT, okay? So these goods include, as I mentioned, they are zero rated. So they include fuel levies, food stuff like your maize, your brown bread, exported goods and services. Okay, so they are provided that they are not supplied for immediate. So there's certain other basic food stuff that also can be charged as zero rated, like a glass of milk in a restaurant. They also fall under zero rated. So just read up in your textbook, but these are your general zero rated. So the difference, remember, between zero rated and exempt, For exempt, there's no input and output VAT. For zero rated, there's no output VAT. VAT is levied at 0%, but there is input VAT can be claimed against these items. Here, there is no input and no output VAT. So exempt items means no VAT is levied on these goods. There is no output tax and no input tax deductions that are allowed against these supplies. And examples are medical and trade union contributions, educational services, residential accommodations. There is no input or output VAT. These are exempt. Zero rated is VAT is charged at 0%, but they are input tax deductions allowed, right? So that's the difference. You just need to know if they ask you examples, you need to know the difference between the two. And if they ask you what is an example of a zero rated product, you need to know these examples. And for exempt, you need to know these examples, what they are, all right? So basically the VAT system works in a way where the mechanics are based on a subtractive input and output method, right? So when a vendor is allowed to deduct the tax incurred in an organization, input tax from the tax collected on the suppliers. For example, the VAT system works like this. You supply goods and you charge VAT on it, and that's called output tax, right? So if you sell goods and you charge VAT on it, that's called output tax. And if you are paying for any kind of expenses and you paid VAT for your expenses, that's known as input tax. So what happens is that you take what you collected as VAT and what minus what you paid out as VAT, and then that becomes payable to SARS. That money is not yours. So if you collected 10,000 in VAT, that's your output tax, right? On all the goods you supplied. And according to your operational expenses, you paid VAT on items that you purchased for the business and running of your business. Your total input tax was, just say, 8,000. There's 2,000 of VAT that's sitting in your bank account that doesn't belong to you. Output minus input, that amount belongs to SARS. So that's how it works, okay? So the VAT system works that a vendor must submit a VAT 201 return to SARS every tax period, right? Now, normally it's paid by the 25th of a tax period, and generally a normal person paying VAT pays every 2 months, unless your taxable supplies exceed 30 million. If you were having taxable supplies of over 30 million, then you have to submit a VAT return every month. Normally, it's every second month. That's generally the system, right? Certain people running farming enterprises and so on, they submit only twice a year because their VAT is not allowed, right? Biannual. And small businesses that have a taxable income of less than 1.5 million in a 12-month period, they can submit VAT every 4 months. So that is basically the VAT system. Normally every 2 months, unless it's over 30 million, then it's every month. Then you have farming enterprises, they are allowed to submit every 6 months. And small businesses that have very less VAT, that's below 1.5 million, can submit once in 4 months. Okay? So basically, VAT, as I mentioned, works with what you collected minus what you paid, and that amount becomes payable to SARS. Just say, for example, you paid more than what you received, then SARS owes you money. That's become refundable. So you can claim from SARS if you paid, just say you collected 8,000, but you paid 10,000. So then it becomes a credit where SARS becomes your creditor and has to pay you. Normally, SARS becomes your debtor and has to pay you. Normally, SARS is a creditor because you owe him. Okay? So when he owes you, he becomes a debtor where he needs to pay you money, right? So what's very important that you notice is that I want to share my screen with you now of the textbook. So I'm going to try and get you onto. Trying to find writer source. Okay, there's it here. Okay, so this is the textbook now. So I'm showing you this input tax. So if you look here, is the tax that the vendor himself has borne in respect of goods or services supplied to him. There are some expenses upon which input tax is not allowed. Example, acquisition of motor cars. If you buy a motor car and you pay VAT on it, you cannot go and charge that now to SARS and say you paid VAT on that, right? Unless it's for business reasons it was paid for, right? Output tax. This is a tax which a vendor charges on the supply of goods and services in the course of running his business. So remember, what is payable is the difference between output and input tax. And where a vendor's output exceeds his input, VAT is payable on the difference. And where your input exceeds your output, VAT will be refundable to the supplier itself. Okay, so we're looking at an illustrative example here. See the farmer, he is selling goods to the value of 100 Rand, right? He's going to pay, he's selling the goods, so his output tax, he has sold goods to the manufacturer to the value of 100 Rand. So his output tax is 15 Rand. How much he has to pay? He has no input tax because he hasn't paid any expenses on it. So he's received 15 Rand because 100 plus VAT is 115 Rand. The VAT is the selling price plus. So when you're looking at markups, remember something, right? I just want to inform you this. Your selling price is an amount that excludes VAT. What your marked price is a price that includes VAT. There's a difference between marked price and selling price. Selling price is the amount excluding VAT. So when he sells this product, he's selling at 100 at 15%, including VAT. So 15 Rand belongs to SARS, right? The manufacturer pays 500 to the farmer. So let's look at what the manufacturer has done now. So how much does the manufacturer has to pay to SARS? He has paid 15 Rand to the farmer, so that becomes his input tax. And his output tax is 75 Rand. So 500 at 15% is 75 Rand. So 60 Rand, 75 minus 15, 60 Rand is payable to SARS from the manufacturer. The manufacturer sells to the wholesaler 700 Rand. Selling price, excluding VAT, remember. The VAT is 105 in that. So his input tax is 75 Rand. That's the output tax here becomes the input tax here. And now how much does he owe to SARS? 105 minus 75, he has to pay 30 Rand to SARS. Eventually the retailer has to sell to the consumer and they sell at VAT of 150. Input tax is 105 and output tax is 150 and the tax due to SARS is 45 Rand. So total value that SARS collects is all of this added together. From the farmer, it's 15 Rand. From the manufacturer, is 60 Rand. From the wholesaler, is 30 Rand. And the retailer is 45 Rand. Eventually, SARS had to collect 150 Rand from this entire sales that has taken place. Okay, so this entire transaction that has taken place, 150 Rand belonged to SARS. Okay, so just an example here, when you say an amount is VAT inclusive, it means that VAT has been added. So if an amount is VAT inclusive, how do you work out the VAT amount in it? You take the percentage of your VAT rate divided by 100 plus your VAT rate. So if you sold an amount if you sold goods to the amount of 1150 and the amount includes VAT, what is your VAT portion? You take 1150 times 15 over 115 and you work out the VAT amount will give you 150. So when you have a VAT inclusive amount, to work out your VAT, you take the amount that you sold the goods for times 15, which is your VAT rate, divided by 100 plus the VAT rate, which is 100 plus 15 gives you 150. If an amount excludes VAT and you want to work out how much your VAT is going to be, you take your percentage of your VAT, which is 100, divided by, percentage of VAT, which is 15, divided by 100 times the amount excluding VAT. So if the goods are being sold at 1,000 Rand excluding VAT, what is the VAT amount? You take 1,000 times 15 over 100, gives you 150. So you see VAT inclusive. For VAT inclusive amounts, your denominator has 100 plus the VAT rate because it's VAT inclusive. This denominator here has only 100 because it's a VAT exclusive amount. So there's no VAT included here. That's why you say 1,000 times 15 over 100. So remember, if it's VAT exclusive, it's plain 100 at the bottom. If it's VAT inclusive, it will be 115. Okay. I want to show you a few more examples. So Mr. Hain purchases computer hardware components for 1,000 Rand, excluding VAT, from a computer hardware manufacturer, and assembles a computer which he sells to Ms. Cami for 1,710. That is an amount including VAT, remember. So she then installs a software program and sells it to Ms. Senyash, the end user, for 3,420. This amount also includes VAT. So let's work out the VAT that has to be paid. The computer manufacturer, or the person, Mr. Hain, has 1,000 excluding VAT. So let's work out the VAT on that. 1,000 excluding VAT means 1,000 times 15 over 100. The VAT payable on the 1,000 is 150. So that becomes the input tax for Mr. Hain now when he sells this goods, okay? He sold it to Ms. Cami for 1,710. So he bought goods to the value of 1,000. So he paid VAT on the 1,000 of 150. He sells it to Ms. Cami. So his output tax now is 1,710 times 15 over 115. Because why? This amount includes VAT. When it includes VAT, the denominator is 115, not 100. Why it was 100 here? This was excluding VAT. Okay, so let's work out his output tax is 223. You take 1,710 times 15 divided by 115, and the amount payable to SARS is 223 minus 150 is 73. Then it's Ms. Cami receives, so Ms. Cami actually paid Mr. Hain. Her input tax is 223. So she paid 1,710. So the input tax that she incurred is 223. She then sells it to Ms. Sanyash to the value of 3,420. And this amount now also is inclusive of that. So times 15 over 115, and you get an amount of 446. So how much does she owe to SARS is 223. So the total amount collected by SARS is 446, 150, 73, and 223. So that's the amount that's collected by SARS. So if you look at the SARS account, this is how it normally looks, the general ledger. Input tax on the debit side and output tax on the credit side. Input minus output will give you a balance carried down and balance brought down. Okay, so if you received, you can see that they collected more than what they paid. So the balance owed to SARS is 223. Very important to understand that VAT can lead to overpricing of goods if it's not excluded from your markup calculations. Okay. So when goods are purchased and the cost of goods purchased has been established, the merchanter must decide on a pricing policy. So you know what a markup is, right? If you buy something, it's known as the cost price. You put a markup on it, that becomes the selling price. A markup is how much you want to add to the cost price to make it a selling price, either 25%, 30%, 40%. It depends on what your pricing policy is for your company. That becomes a selling price. The marked price is different from the selling price. The selling price excludes VAT. Selling price plus the 15% of VAT becomes the marked price. So remember this thing here. Cost price is what you purchased. Markup is what you are adding to it to get the selling price. Then you add VAT of 15% and that becomes the marked price. Okay? Whenever you are doing a calculating for a missing amount, there's a formula here. I'm going to show you the example that we were looking at just now, that when you are working out something that is unknown, you take the percentage of the unknown over your percentage of your known times your Rand value. Now you will see it by example what I mean just now. All right. If you look here, when a mark price is on, when the markup is on cost price, then the cost price becomes 100%. and the selling price becomes 100 plus your markup. So in this example here, we have cost price of goods is 100 Rand. The markup is 10%, which is 10 Rand, and the selling price is 110 Rand, right? So if we have to work out, just look at this example where they have a blank here, right? We are given the cost price. We are given, and we said the cost price is 100%. We are told that the markup is 10%, and we have to work out the Rand value of the missing selling price, okay? So if we have to work out something that is missing, you take the percentage of the selling price, which is, the selling price will be 100 plus markup, which is 10%, 110%, over 100%, times the value that we have here, which is 100 Rands, giving us 110 Rands, okay? Now I'm going to do an example that will make more sense to you just now, okay? So let's go to this example here. Now, this is from your textbook, is part of your examples that you're going to be doing for your tutorial, but I want to do an example with you that's very similar to what you get in your test and exam. Please go through the entire tutorial exercise. As I mentioned, your solutions are for 14%, but remember, you need to work it out as these examples that's here, the illustrative examples, 8.2 and 8 VAT using marked price. You must go through that. Please go through these examples in your textbook. This is for your self-study. I want to do an example with you from your tutorial exercise now, right? So I'm going to share an example with you from your tutorial exercise. Let's see, we're going to do exercise 4 and exercise 5 together, all right? So if you look at exercise 4, they tell you Sancam Stores marks its good at its goods up by 20%. So the markup is 20%. They said that they received 2,300 from Ria Boutique for goods sold. We need to now calculate the output tax. So if we received 2,300, this amount includes VAT. So we know the amount that includes VAT. We know the markup. They want us to calculate the output tax. Now, this is a little bit of a complicated example. That's why I chose to do it with you. So I'm going to share my screen with you now with the solution, and we're going to see how we're going to work out such an example, okay? So you are given the mark price of 2,300. You have to work out output tax. That means you have to work out the VAT on it. How do you work it out? Let's work it out. So we take 2,300. It's amount including VAT. If an amount includes VAT, how do you work out VAT? You take the amount including VAT times 15 divided by 115. 100 plus the VAT. 300 is your output tax. Can you see? 2,300 times 15 over 115 is 300. So how much is the selling price? 2,300 minus the VAT gives you the selling price, because remember, selling price is before VAT. So VAT is 300, selling price is 2,000, the markup is 20%. So let's work out what the markup was. So 20% over 120 times 2,000, because remember, the selling price included the markup, okay? So it's 2,000 times 20 divided by 120 gives you your markup, and your cost price is 2,000 minus 333 is 1,667, all right? So that's how you work it out. Remember, cost price is 100%, selling price is 120%. Why? Cost price is 100%, markup is a 20%, selling price becomes 120%. That's why I said 2,000 times 20 divided by 120 will give you your markup here. All right? So that's how you work it out. I'm going to do another example with you. When you are done with this, when I'm done with our lecture today, you must go back. It'll be recorded and uploaded on Learn. You must attempt your examples when you are preparing for your tutorials, and then go back and see what I've told you about how to work out certain examples, okay? So now I'm going to look at the next example.